Hello, folks. Happy Columbus Day weekend to you as we are rounding out what was one of the most bearish weeks of the year. That's right. You may not recognize it yet, but after we're done with this market update, you'll see it because we're seeing some of the most bearish formations in terms of price formations, and it's really setting us up for an incredibly bearish October. You're going to learn about it all in this market update for October 11th, 2022. Let's go. Hello, everybody. It's Jeremy Whaley here from Trade Maestro. Hope you guys are all doing fantastic. Hope you're having a great weekend. Happy Columbus Day to you. The markets are closed on Monday the 10th, so this is actually an update for Tuesday, October the 11th, 2022, as we are wrapping up this week and getting ready for next week. And as I alluded in the intro, we had a very, very bearish week. We had some very interesting price action closing out on Friday, and we're going to go through that. I got some pretty interesting things to share with you. Before we do that, I want to make a couple of announcements for you. If you're seeing this, then you're probably on my mailing list, and that means that there's a special going on for you for my upcoming Market Maestro Accelerator. So I'll put a link below in the video. You can go over there and click on it. I got a special promo going on this week, and you can save quite a bit if you go ahead and get yourself signed up for it. We're not actually going to be teaching it until November 1st, so you have a little bit of time before the teaching happens, but the super exclusive early bird special is happening this weekend, so you can get yourself signed up for that. Again, it's the Market Maestro Accelerator. I'll be talking a lot more about that coming up. Also, pay attention this coming week. I haven't fully announced it yet. This is kind of my first soft announcement for it, but I'm going to be teaching a new bear market survivor course, which is going to be a 3-day training for you guys who are in the midst of it right now, which is everybody. And that'll be coming up midweek next week. So get your eyes open for that, and you'll be seeing some promotions for that. If you're not on my mailing list for some reason, at the very least, you need to get subscribed to my YouTube channel. But if you're not on my mailing list, then get yourself over there to trademaestro.com, get signed up so you can get all these promos and special offers and obviously all the announcements. All right, there's my announcements out of the way. I don't always do that, but I wanted to make some of those announcements today. Let's get into our charts, and you have to forgive me if I'm coughing a little bit. I'm a little bit under the weather at the end of this week here, but you're seeing on the chart here on the screen, you're seeing the Dow Jones Industrial Average. I'm going to zoom in here. I'm going to make it full screen so you can really see it, and you will see all these. I know you see all the lines, but you can see all this price action right here. We're going to spend a lot of time talking about that because there's a lot of subtle nuances that are happening this week. To the naked eye, most people are ignoring it. They don't realize what really happened this week, but this was a very, very telling week. Now, as I zoom out just a little bit, you're going to notice that we're right at these support levels. These are the same support levels we were at a week ago, essentially the same support levels. All we did this week was had a little bit of a bullish correction to the bear market. But all things considered, this bearish trend is continuing exactly the same way we would expect it to be. We are at those critical levels moving into Tuesday and Wednesday next week, where we're going to see if the support holds, which I don't think it will. Notice as I talked about earlier in the week, we did actually ease up on that stochastic that was so oversold earlier in the week. Sunday night, I talked about this in my profit picks, and I told you that there was a good chance we were going to bounce. It was actually the last thing I told you Sunday night. And then, of course, we did bounce and found our resistance here around our 20-period moving average, where we are starting to see the selling pressure come back in. That is happening across all three of the indices here. That's the Dow Jones you're looking at there. Here is the S&P 500. I'll just kind of zoom in so you can really see that there. There's the S&P 500, and here is the NASDAQ. So now that you've kind of got that as an overview, let me show you what's going on in here that's really, I don't want to say it's concerning, it's confirming is what it is. It's not concerning at all because it's confirming what we've already known, right? It's confirming exactly what we thought was going to happen. Before I do that, I want to take a little bit of a brief move over to a weekly chart. I don't do this often. I did this last week. I'm going to hide a bunch of this stuff so you can really focus in on just the price action. But I just this is a weekly chart. I do not spend hardly any time on a weekly chart. You can see it's a 1 week. So that means every candlestick represents a week of trading behavior. And I do not do this very often, but since we've been tracking this bearish trend since last November, realize that this is actually a large scale bearish trend. If you were to look at the Elliott wave cycles on this, this is at least probably a super cycle level, maybe even higher. We'll have to see if it goes any higher than that. But this is a big picture trend. And you're only going to see the big trend reversals like this on a big scale, like a weekly chart. So back in November, I had shared this with you. If you were paying attention back then, I shared with you something we call bearish divergence. We were putting in these higher highs on the index itself and these lower highs on the stochastics oscillator. It was happening on all three of the oscillators that we use. And that is a big signal warning of a bearish reversal. Of course, that was bearish reversal, bearish divergence, leading to a bearish reversal. That was happening last November. And then, of course, as we got into January, the bear market really kind of started to take hold. Of course, the mainstream media has not picked up on this until recently. Last week, when the market was so bearish, we were seeing the mainstream media finally talking about recession and other stuff, pretty intense. And then it kind of eased up earlier in this week because we saw a little bit of a bounce. But watch next week. It's going to be probably, if I had to forecast, you're going to see bearish news all over the place. You'll probably, who knows what the stories will be. They will come up with some sort of stories to support the bear, but it will be a bear market, almost guaranteed next week. Can't fully guarantee it, can't guarantee anything, but what I want to bring your attention to on this chart for this week, as I kind of zoom in here, I'm going to zoom in only because I'm afraid you won't be able to see it otherwise. But if you can see this in here, notice our stochastics oscillator. It's been bearish for about 3 or 4 weeks now. We're still quite a ways off of oversold on the weekly chart. That gives us plenty of room to keep running here. But look at this candlestick. Do you see that candlestick? Now, that may not mean much to you, but it will by the time we're done over the next 10 or 15 minutes here, because I'm going to teach you what this means. It looks like a green candle because it is a green candle. Okay? When you just look at the candlestick itself, it's a green candle. Why? Because for the week, the market was up 571 points. Okay. Now understand how candlesticks are constructed. In case you've never had a course in candlesticks, which is part of the core trainings that I do, but you know, a lot of people have never learned how candlesticks work. So let me teach it to you really fast here. If you've never looked at candlesticks before, you have an opening price. We'll just denote that with an O here. And then you're going to have the high price of the day, which is going to be at the top of the candle shadow. You'll have the low price of the day, which will be the bottom of the candle shadow. And then you have the closing price of the day, which if it's an open hollow candle like this will be a higher close than open. That's how you get an open candle like that. And by the way, when we color those, we tend to color that green. It's really not the right color. The right color is hollow. It should just be a hollow candle. But, you know, charting softwares being what they are, people started coloring them red and green. If it's a down day, it will look like this, and they'll shade it in like such, okay? So in this case, you have an opening price, the high of the day, the low is the low of the shadow, and then the closing price, okay? So for those of you who've never traded candlesticks, that's how it works. Now, again, with modern charting softwares, they tend to color these red and green, which is not the way Japanese candles were designed, but it's for another conversation, even though it drives me crazy. So just assume that's a red candle. So if you have a green candle, what it means is it means that we had a higher close than open. Understand that these candlesticks are for the week. It's a weekly chart. So that means that what we had on this candle to create this green candlestick here, now I got too many key commands going. Let's get the green going here. There we go. In order to create this green candlestick right here, the opening price is way down here, okay? So I'll mark that here. Opening price is right there. The closing price is up here, okay? We basically opened at the low for the week, and then we had this long candlestick shadow at the top. It's a bullish week. We have a green week. Everybody's happy, right? Well, yes. In the media, everybody's happy because most people have this idea that we're just going to look at week over week performance. And since we closed up 500 points for the week, then obviously we had a bullish week. It was a good week on Wall Street. That's what the media would say. But what they're not telling you is that internal story. How did we create that upper shadow? How did that long upper candlestick shadow get created? And the answer is it was only created because of the bearishness. This is a very interesting story that we're seeing lay out in these candlesticks. This is one of the reasons we use candlesticks, because it gives us moment by moment an insight into the sentiment of the traders. And what you're seeing with this long upper shadow is you're seeing incredible bearish selling pressure. Okay. Now, before I go in and show you how that was created, I just want to bring some attention to this for you. Notice, if you can, sorry that my voice is so weak tonight. Notice, if you can, it wasn't too long ago that we had a long upper shadow at the top of the swing up here. You see that? And that's a special candle that we call a doji, but that created a 3-candle pattern that we call an evening, I'll just abbreviate it ESR. It's an evening star reversal. It's actually an evening doji star because the star is a doji. But look at that long upper shadow. Again, lots of selling pressure, and what followed that was a whole lot of selling. Okay, let's come on back a little further here. Long upper shadows followed by selling. Long upper shadows followed by selling. Come back a little further. Long upper shadows followed by selling. Long upper shadows followed by selling. And I can keep going and keep going. Long upper shadows are a bearish signal. Okay, now a lot of people, most people, I dare say most people, when they're looking at charts, they do not realize that long upper shadows are a bearish signal. I myself, whenever I was learning to read candlesticks, if I saw a long upper shadow, I thought, oh, well, it traded all the way up there. That must be pretty good. But it was naive. It wasn't true. Okay, just because something traded substantially higher doesn't necessarily mean that it was a bullish day. It was bullish at some point, but then the bears came back in and they drove it back down. So understand, how did we create this candle right here? And what I want to do is I'm now going to go into a daily chart. So we're switching over to a daily chart. And I'm going to get rid of all these moving averages so that we can really zero in on the chart itself. I'm going to try to focus in on this and show you what is going on here. We're just focusing in on these last 5 trading sessions. And the way that that weekly candle, the way that it was created, I just moved my pen to a color I don't want. I'm sorry. There's too many things happening here. I got all these key commands and a couple different applications running. All right. So let's come down here. This was our opening price for the week. 5 days ago, that was the opening price for the week. So let's just mark that right over here. Okay. Then we traded all the way up on Wednesday to this high point. So we're going to mark that up here. And then we closed the week right here. So we'll mark that in here. Now, we didn't have a lower low for the week. The opening of the week was the low. So that's how you end up with that candle right there. Again, why is that important? Why am I drawing your attention to this? In order to create this long upper shadow at the top of this candlestick, we had to have bulls very bullish, and the bears came back in. Think about it this way. You like Major League Baseball? I like baseball, okay? All year, the New York Mets have been at the top of the National League. Until about a week ago, when the Atlanta Braves came back and they managed to inch out the Mets and win the division by just a couple of games. All year, the Braves were just behind, and they edged out and they beat the Mets, and now the Braves have the advantage in the playoffs, and the Mets are stuck playing in the wild card, and they lost big today to the Padres. We'll see how they do the next couple of games here. What does that have to do with trading? If we were to put the Mets season on a chart, it would look a lot like this right here. It would look like the Mets come out and they run the National League for most of the summer. And then right at the end of the summer, they give it up to the Braves. Okay? If you put the Mets season into a candlestick, it would look like this. Long upper shadow. They have lost their momentum going into the playoffs. Now, they're still winning. They're still doing well, relatively speaking. They got second place they got second place behind the Braves in the division. But they're not doing as well as they were for the entire year. Does that make sense? So what do you see? You see that momentum waning, and the Braves' momentum is surging. And what does that mean for the Mets? Well, I don't know. The next couple of games are going to tell us. But if the Mets perform tomorrow like they did today, they're going to be out. And even though they've been ahead in the entire season for 160 plus games, there's a very good chance the Mets are not going to make it to the World Series this year. Very, very good chance. And the Padres are surging. The Braves are surging. I mean, it's interesting, right? That's what you saw happening this week in the market. What you saw happening this week is the bulls came rushing back with a vengeance. We had let me look at the days here. I can't remember the point values, but Monday was 765 to the upside. Tuesday was 825. So you had 1,500 plus points in 2 trading sessions. And then on the next day, we still ended up with a green candle. Slightly down just a little bit was a green candle. But Thursday and Friday, the bears have come back. The bulls have lost that momentum, and the bears are starting to drive down. That's what this candlestick tells us. It's a really important and interesting signal. There's other things that are happening in here that I wanted to draw your attention to that are also very bearish leading into next week. And I know Monday's a holiday, and so be it. It is what it is. But take a look at this. This candle formation right here, that 3 candle formation, is something that we call an evening star. Wow, my pen really is mad at me tonight. It's often mad at me, but it's really mad tonight. Evening star reversal. I promise my handwriting is slightly better than you see it on the screen here. All right, reversal. My spelling is not always better than what you see on the screen. All right, so evening star reversal, that is this 3 candlestick formation right here. Where you see it, where it plays out and where it's really important is in the context that you see it right here. After a little bit of a bullish swing, you see the evening star reversal, and that is a signal of a bearish swing to come. Now that's interesting. So what we're seeing here is we're seeing on multiple time frames. And I'm going to show you another multiple time frame piece. It's going to be really interesting as well. What you're seeing on multiple time frames here is you're seeing bear signals that are telling us the next wave of the bearish momentum is on its way. Now let me just draw something for you here. Remember that bear markets do not go straight down any more than bull markets go straight up. Neither one of these is true. Okay, everybody wants it to be true, but it's not true. Markets go down in a nice orderly fashion, and then they bounce, and they go down, and they bounce, and they go down, and they bounce. And then they go down, and eventually they put a bottom in, right? Each one of those bounces is something that we call a counter move. And at the top of those counter moves, this is where you want, when you find that evening star reversal at the top of one of those counter moves, boom, that's money. That's where you start shorting the market. That's where you start selling. It's where you start positioning yourself for the next wave of the bear market. Well, let's come over here and let's look at what has happened just in the last few weeks on the Dow Jones. If you can see all these candles in here, we had. We'll just start right up here. Let me kind of mimic this with a blue pen because that's what I use. We had our bearish momentum, counter move, bearish momentum, counter move, bearish momentum, counter move. Bearish momentum is what's to come. You see that? Now, if you look inside that, I'm going to erase this so you can see it more clearly. If you look inside what I just did, what happened at the top of this counter move? There's a bearish candle formation. What happened here? Another bearish candle formation. Looks a lot like an evening star. It's not, but it's very similar. What do we have right here? There's your evening star reversal. Okay. Now, this is how the market works. And if I had time to go through it all tonight, I would, but I don't. So I'm not going to go into great detail. But if you go back to all of these market turns, there's different candle formations that are telling us that the market's turning. That's why we use candles, by the way. We use candles not to give us a big picture trend change, but to show us what's happening in the day-to-day sentiment. Okay. So we're seeing that right now. So now what you've seen is you're seeing on 2 different time scales. On the weekly chart, we notice that we have that long upper candlestick shadow, shows all sorts of selling pressure in the market. Okay. On a daily chart, we see an evening star reversal. Now, here's the one that you probably don't know to recognize, but you're going to know it right now, and you're not going to be able to ignore it once you see it. If you look in here on the daily chart, you're going to see something fascinating happen on Tuesday. we created what's called a trading gap. Now, trading gap is created when there's a difference in the closing price of yesterday and the opening price of today. That's how you get a trading gap, okay? Gaps are powerful because they show a lot of interest in the momentum in a certain direction of the trade. The reason it happens for something like an index is because overnight the futures soared, and since the futures went up a lot, then the index ends up gapping the next morning. Futures trade overnight, the index obviously doesn't, so you end up with a gap the next morning. Well, then we had something else that happened, and this is where the real interesting part of the story is, and that is on Friday. Today, I'm recording this video on Friday night here, even though it's going to be good through the weekend and into Tuesday the 11th. I'm recording it Friday night, and this is what happened this morning. There's another gap. This time it's to the downside. These are true gaps. Now, there's something we call an opening gap. Happens when the open, but it fills within the day. That's very common. A true gap like this, you can draw a line right through the gap prices, and you don't touch any prices. That's significant. And it's significant because it shows momentum building so heavily. In fact, the Japanese traders, back when they were back in the original rice trading days, 1700s, they used to call these gaps windows, and they used to say trade in the direction of the open window. If the window's open as a bullish window, then you're bullish. If the window's open to the bearish side, then you're bearish until the window gets closed, until that price action gets closed there. So if I zoom in here a little bit, hopefully you can see this, you're going to notice that we are now in a bearish window. Okay, we had a bullish window on Tuesday, between Monday and Tuesday. Now we have a bearish window. And that is yet another signal that shows that this thing is moving to the downside coming into this next week. Now I'm going to show you one more angle of this. And what we're going to do is we're going to zoom in on this part of the move right here. We're going to zoom in on that on a 30-minute chart. You ready for this? So we're going to go down to a 30-minute chart. I don't do this one very often either, but it's just so relevant, I have to show you. Look at what that window looks like. Okay, here's the gap. That was the Tuesday gap right there. Here's the Friday gap. What does that create for us? This creates well, in gap theory, we would call this, on this side here, we would call this a breakaway gap, BA for breakaway gap. And then the trend immediately reversed, and we had a breakaway gap in the opposite direction, or maybe somebody might want to call that a continuation gap. I would be fine with that too. Doesn't really matter. On this 30-minute chart, it looks like two breakaway gaps, what it looks like, or a reversal gap. Anyway, together, these create what we call an island. An island reversal. Whoa. That sounds like a place you want to go hang out, right? An island reversal is a very, very strong reversal pattern, showing a reversal of sentiment. Now, I know if any of you happen to be pure chartists, you might call me out on this. In a pure technical sense, an island reversal should happen at the top of an uptrend or at the bottom of a downtrend where it's reversing the other direction. That would be a bullish reversal. This is not completely a true island reversal because it really was not at a high, but in this context, it's at least at the top of the upswing, and you have a lot of that same island reversal sentiment on this 30-minute chart. Regardless of however you choose to label it, the sentiment is clear. The bears are in control right now, okay? I don't care what anybody else tells you. The bears are in control. And I'll tell you what else is interesting. I hadn't noticed this before I was getting ready for this tonight. I don't know why I didn't notice this before. I know why, because I don't spend a lot of time on a 30-minute chart. But we had another island reversal. We actually had a couple of variations of it here. Back here in, when was that? It was earlier in September. Right there was another island reversal. You could draw a line through both sides of the price action and creating a little bit of an island there, okay? Very, very bearish signal, and you can see, obviously, what happened after that. I'll come back to a daily chart, and I'll show you where that occurred on the chart. That occurred right here, okay? So that little blip on a daily chart was the island reversal on the 30-minute chart. That little blip right there on the daily chart, the island reversal on the 30-minute chart. Why am I showing you all this? I'm showing you all this to articulate to you that we are getting internal signals inside the price action that is warning us what's happening next week. I expect next week's going to be very, very bearish. The overall trends have been very bearish. The momentum has been very bearish. Now we're seeing micro views. When you come down to that 30-minute view, you come into these, internal views within these candles and stuff, and they're telling us the same thing. The sentiment has shifted. I will be very, very surprised. Last week when we got done with the week, I was kind of prepared to see some bounce here, and I talked about that. This week, I'm telling you, I think I will be very surprised if we do not see a lot of bearishness next week. I think we're going to hit it probably with a vengeance. I think it's probably going to hit for about a week or two. And I bet, as I have been saying all along, I bet by the time we get to the end of October, we're down at 26,000 on the Dow. All right, that's my forecast for that. We'll see if I'm right. We should be pretty close to it, but I definitely expect we'll be seeing lower lows next week. So be prepared for that. I think that's probably all I need to update. That was kind of more of a technical analysis lesson than a pure update. Just looking here briefly, see if there's anything else I need to pick up on. I guess if you didn't see my crypto updates, you should go check that out. You're looking at XRP here. XRP is giving us some good buying signals. And let me turn my averages back on so you can see those here. XRP is giving us some really good buy signals. I've done a new trade setup here with a 53-cent entry. I wouldn't be surprised if we hit that over the weekend. Crypto markets do not care that it's Columbus Day, so they will be trading with joy and glee. The Bitcoin has not made a move yet. I did a big update on crypto this week, so if you haven't watched that, go watch that. I'll try to remember to link it at the end of this video. But Bitcoin has not made a big move. Still pounding into support. Nothing new on that picture. It has not done anything positive or negative. Same thing with Ethereum. But XLM has started to make a move. This is XLM now. It's Stellar Lumen. Show you here. We're still putting in this accumulation period. Again, if you have not seen my crypto update for this week, go look at it. I might even do another one this week. This is all there is to update. So this is the accumulation period in here that I just circled, and we are right at the point of breaking out. I probably will do a stellar workup like I did for XRP. In fact, why don't you guys tell me in the comments if you want to see the stellar lumen, that's XLM, if you want to see me doing a update for that, the way that I did for XRP. And if that's something you'd like to see, then let me know, and I'll get that out. If not during the weekend, first part of the week. But there's a couple cryptos to get your eyes on, and I guess that's probably it. That's probably all we need to update on tonight. After all, it is a holiday weekend, and I'm sure that you're going to be hitting all of your favorite restaurants and partying over the weekend because it's Columbus Day. Now, Columbus Day may or may not mean a lot to you, but for me, it means a lot because it was the day that I got married 17 years ago. So Monday, which is Columbus Day, we will be celebrating our 17-year anniversary. So happy anniversary to me and to my wife. And of those 17 years, I think I was happy for at least 16 and a half of them, and I'm not sure she was ever happy. No, I'm just kidding. No, I love my wife, and happy anniversary to her if she happens to watch this video. So thank you all for watching. If you've not subscribed to our channel here, get yourself subscribed over here. If you've not subscribed on our website, trademaestro.com, get over there and get yourself subscribed on trademaestro.com. And I guess that's probably all I got for you tonight. So you guys have a wonderful weekend. Have a great Columbus Day. And until next time, happy trading to all of you. I will talk to you soon. Have a great weekend.